After nearly 2 years of negotiating, Sony Group on Monday has finally called off its $10 billion merger with Zee Entertainment. This development comes after a crucial meeting was held on Friday, following which a final decision on the merger deal was expected. Sony said in the statement it had engaged in good faith discussions to extend the end date to complete the deal, but the companies were unable to agree upon an extension beyond their Jan 21st deadline. This, of course, was already an extended 1-month deadline. But according to a statement issued by Zee Entertainment, Sony is also pursuing a termination fee of $90 million from Zee Entertainment, citing alleged breaches by the company. Although it must be noted that Sony did not specify on Monday what conditions remained unfulfilled. Zee, however, refuted all claims made by Sony, asserting that it has not breached the terms of the merger agreement. The company is actively evaluating available options to address the situation, including taking appropriate legal action. In a response to Sony calling off the mega merger, Zee CEO Puneet Goenka, who was in Ayodhya yesterday, said on X that it seems to be a sign from the Lord, adding he would move forward, strengthening his company for the stakeholders. Now, this $10 billion merger discussion was initiated in 2021 and was originally slated for completion by December 2023. And then there was a 1-month extension. However, the deal hit several roadblocks right from inception, including regulatory issues, deadline extensions, among others. The root cause of the termination, however, lies in an extended disagreement between the two companies, primarily centered around the leadership question on who would be the CEO of the merged entity. Zee had proposed CEO Puneet Goenka take the helm, but Sony did not really concur and was pushing NP Singh, the Sony India head, to be the leader at the merged entity. Last year, the Security and Exchange Board of India, or SEBI, had also barred Puneet Goenka from holding management positions in listed companies, accusing him of diverting Zee's funds to the group's other listed entity. While Goenka denied the allegations, SAT later in October said that he could go ahead and take management positions but must comply with the investigations of the regulator. Zee then sought a deadline extension, a request to which Sony agreed. However, the latest development to scrap the agreed upon merger comes after this 30-day grace period has also lapsed. Now, what next for Zee? What next for Sony is the big question on everybody's mind. Joining me to make some sense of it right now, given the news developing and the speculation all around, is Karan Taurani, Senior Vice President, Elara Capital. Good morning, Karan. Thank you so much for being with us this morning on Business Plus. Question number one, what next for Zee Entertainment?
Hi, good morning. I think in terms of what next, it's very uncertain in terms of what exactly is going to pan out. They might try and find for a new strategic or a financial partner. But if you look at the M&E industry as such, we don't foresee that there is anybody left now. RIL is already in talks with Disney. There's no large other MNC broadcaster or OTT platform who would want to have an interest on Zee's business right now, because still 90% of the revenues are from linear TV side. So I think it's going to be a troubled time for them in terms of their growth, because with Sony, what we were trying to build in is that they were supposed to grow at a very faster pace. They were supposed to take the full advantage of the synergies in the business, and this could have also led to them gaining potential market share in the linear TV side, which is already struggling for growth. So I think it's going to be troubled times for the financial impact of the company.
Okay, so help me make sense of this, Karan. Who tends to lose more on account of this merger not going through? Sony, which has just a meager 6% market share of the Indian M&E industry. Zee, on the other hand, already commands about 25% market share. Zee does not have the money, Sony has the money. With this deal not going through, is it more bad news for Sony or is it worse news for Zee?
I think both parties will be at the losing end here, because even if you look at Sony, once the RIL Disney merger happens, it's going to be tough for Sony to scale up. And also, just on the numbers perspective, I think in terms of the M&E industry is not the correct number to look at it, but overall advertising number perspective, both are largely at par, Zee and Sony.
Okay.
And I think they will also have equally have a negative impact in terms of how they're going to scale up India operations, because we believe that for Sony as well, India is a very big focus market. It's the only market which is growing on the linear TV side as compared to other markets which are seeing a decline. And a lot of ambitious plans could have been laid out on the technology side as well, once the Zee-Sony merger could have played through.
Right.
So I think it's going to be a double whammy for both, but it's a bigger negative for Zee than for Sony, because I think Sony will continue to run business as usual. But for Zee, there is a dilemma in terms of the legal proceedings. I
Right.
think the lenders or the creditors of SL Group, those legal proceedings will continue. There's a legal proceeding from Sony as well, which will happen now, because the termination fee, which they are kind of asking for.
Right.
There could also be a potential overhang in terms of Disney, because if you remember, Zee had signed a deal with Disney for buying out the TV rights of the ICC tournaments.
That's right.
We'll have to wait and watch in terms of whether that's honored or not. If that is honored, you could see substantial losses, for Zee as an entity.
Yeah.
So I think bigger challenges for Zee, because even Z5 as a platform to see in terms of the overall OTT ecosystem, they have not scaled up as expected.
Right.
And I think there are going to be challenges to scale up. Plus, there are hefty losses for the digital business as well, which could come down marginally, but it's quite substantial in number. And they're making almost about 1,000 crores of EBITDA loss in the OTT business as well. So I think there are a lot of challenges, going ahead for Zee as a company.
All right. And of course, all in the realm of speculation right now, but it seems that the Adani Group has also in the past expressed interest to go ahead and pick up stake in Disney. That, of course, deal is now likely to go through between RIL and not the Adani Group along with Disney. But do you suspect right now, looking at the industry from the outside, that there is a case for the Adani Group to make some sort of a bid on Zee's entertainment business?
So I would not want to comment specifically on speculation, but let's say hypothetically, there is a case that maybe an Adani comes to bid, for Zee Entertainment as a majority, or tries to buy a controlling stake herein. But we don't foresee valuation multiples of this company going up to where it could have gone because of the deal with Sony. Because what Sony brings on the table is synergies, technological expertise, route to market. They are there in the existing business. They're an MNC company. So I think putting all these things into perspective, the valuation multiple that Zee as an entity would have got, after the merger with Sony,
Yeah.
will not come by with any other entity for that matter.
Okay.
So I think Adani Group, obviously, they are a large corporate conglomerate, and they will bring the financial support, but in terms of expertise, I think they're not there in the media business. So that's why I'm saying that you could see some respite on valuation multiples because of any strategic or financial partner.
Yeah.
But what Sony could have bought on the table in terms of synergies and the business efficiencies and the overall outlook in terms of gaining share in the M&E industry,
Yeah.
we don't foresee that any other player will be able to get this kind of a thing.
Right. So you mentioned Adani is not into the media business, not technically into the entertainment business, but is now in the news business with the acquisition of NDTV. But that aside, and a quick, just a one-line response if possible, Karan, we are running out of time, is that do you think if Reliance was to make a bid for Zee now, will it get the CCI's go ahead?
So firstly, I think in that Adani thing, they have not been a part of the media business, but recently they've become a part of NDTV and the
Yeah.
Quinton Media business, which is there.
Yeah.
But this business is GEC business, so it's completely
Absolutely.
different as compared to what they've been doing. On this Reliance bit, actually we don't foresee this kind of a thing happening. Again, it's very speculative. We believe that Reliance Disney, the talks are ongoing right now. And potentially where things are right now, they could kind of go ahead and get a deal. So if that happens, we don't foresee them, kind of coming and taking, Zee as well, because there could be, CCI and legal obstructions for that. Because Reliance Disney itself, as an entity will be very large, and
Right.
they'll have a close to, a 40%, 45% kind of a market share in terms of TV advertising.
Right. All right, Karan, we leave it there for now. But of course, this is a developing story. Karan, Taurani, thank you so much for joining us this morning. We'll, of course, keep bringing you updates as and when they arrive on what's happening in the mergers and acquisition space in the media industry and more.